Alright guys, welcome back to the channel. Today we're reacting to Senator Elizabeth Warren's exchange with Chair Powell on Fed interest rate increases. I read the title there. Make sure you hit the like button, subscribe to the channel, all that, and let's get right into the video.
Thank you, Acting Chairman. I appreciate the help of the Chairman this morning, and thank you for being with us, Chair Powell. So Americans are struggling with rising costs, and all eyes turn to the Fed. Last week, you announced that the Fed would raise rates by 0.75 of a percentage point, the biggest increase in nearly 30 years. So let's talk about what the Fed is and isn't doing when it raises interest rates to try to bring down inflation. Let's start with gas prices. The price of gas is up 40% since Russia invaded Ukraine in February. Chair Powell, will gas prices go down as a result of your interest rate increase?
Sorry about that. Now I got it on breaking point. Sorry. Here we go. But gonna have to run that back. It's having trouble with the computer.
Is up 40% since Russia invaded Ukraine in February. Chair Powell, will gas prices go down as a result of your interest?
By the way, the gas thing, a few years back, I think, start of the pandemic, oil was like same price as it is now, like $108 a barrel. It cost 3 something back then, but now it's up near $5. So the price of oil is not going up, but the price of gas is. It's corporate price gouging is what it is. A big way to, what would help lower gas prices and potentially even make them free would be nationalizing the energy sector. But let's hear what Senator Elizabeth Warren has to say.
Interest rate increase?
I would not think so, no.
Okay. That matters because gas prices are one of the single biggest drivers of inflation. Energy prices overall drove a third of the inflation last month, but the Fed's tools, as you say, have no impact here. So let's look at another necessity, food. Price of groceries is up nearly 12% this year. Americans feel the pinch. No matter how much groceries cost, people still got to eat. Chair Powell, will the Fed's interest rate increases bring food prices down for families?
I wouldn't say so, no.
Okay. So a Fed...
Under our neoliberal ideology that's in the government, the Fed is very unlikely to intervene in price of food, the price of gas, or any of it because they believe in a free market. They don't want government intervention. But what's really what they want is they are getting they're getting a lot of corporate money from these people. They're getting bribed by these people during presidential any elections, not just presidential, all elections. They're getting these money from these corporations and things, and in order and to pay back the favor of the money they're getting, they don't regulate them. And therefore, without regulation or at least competition, the government could intervene and break up multinational corporations to allow for competition that would lower prices and it would limit price gouging, but the government will not even intervene that little bit. But that could help tremendously on price gouging, because the more competition a business has, the more they're going to try to have the lowest price. Let's continue.
Increase won't bring down these prices. And why? Because rate hikes won't make Vladimir Putin turn his tanks around and leave Ukraine. Rate hikes won't break up monopolies. Rate hikes won't straighten out the supply chain or speed up ships or stop.
She's making a really good point here. A lot with the supply chain issue. We need to put tariffs on our. I am very protectionist when it comes to trading policy. We need to put tariffs on our imports and raise taxes on imports. All of that, prevent outsourcing the jobs, things like that, because it when the United States outsources jobs to countries like China, it makes the labor cheaper. It makes it cheaper to make, but it also raises the prices on the shelves because you're paying for the middleman, the shipping from. There's a better way to word this. I'm just not too very good at wording this. Someone in the comments maybe if you could word it a bit better. But let's continue.
A virus that is still causing lockdowns in some parts of the world. So let's talk about what interest rate increases can do. Chair Powell, you said last week that interest rate increases.
She's got a very good point about the monopolies. I'm glad she pointed that out, though, because monopolies are a real big issue when it comes to corporate price gouging, because there are like 7 corporations that own 3/4 of the food brands we buy in supermarkets and things like that. You go to Walmart, you look at cereal, there's probably only one, possibly 2 brands that own all of that cereal, because it's large multinational corporations owning smaller multinational corporations. I guess they would still also be, but yeah, same with soda. PepsiCo and Coca-Cola own all the name brand sodas in the market. So let's continue.
Quote, moderate demand. Can you just explain a little more about what that means?
Sure. So we think about interest rate increases as affecting financial conditions and then the economy through 3 broad channels, the first of which is interest-sensitive spending. So that's durable goods and automobiles and things like that. So interest rates go up, people's demand for, as a result of higher interest rates, will moderate or decline so that supply and demand can get into better balance. The second channel is just asset prices generally. Interest rates, as they go up, will cause asset prices to moderate across the economy, and people spend a little bit less out of their lower level of wealth. The third channel is the exchange rate, which is really just another asset price, and that just basically as the dollar strengthens, as rates go up, the dollar would strengthen, which would tend to drive.
So I appreciate this, and I do appreciate.
Well, corporations will use things like higher minimum wages and better benefits to price gouge consumers. So, in order for now, this is my idea. I'm not 100% sure if it would work, but I'm fairly certain it would work. The government needs to regulate corporations to prevent them from raising inflation. Price gouging is really all they're doing. Uh, Through like punishments or something, double their taxes, or there's probably a lot more you could do. I'm not sure about all the punishments you could do on corporations, but it would definitely have something to do with taxes. But put regulation in place that prevents corporations from raising the price over a certain percentage. Uh, uh, of the amount they make, or I'm sure there's a better way to word that, but and simultaneously requiring them to pay like at least $15 an hour. I prefer a minimum living wage that depends between but that depends between every worker, depending on how many children you got, how many people in your household's working, how many people you got in your household. That's what I would prefer, but I mean, you gotta take what you can get. So $15 minimum wage may be all that we can get, and it looks pretty bleak as it is right now. I don't think we'll be getting a $15 minimum wage anytime soon. Well, the governor of Kentucky, Andy Beshear, he plans to raise the state minimum wage to $15 an hour by 2026, I believe he said. So that's good for us, I guess, but it could be higher. And 2026 is 4 years away. So let's continue.
The explanation, but let me just see if I can just put a little more plain vanilla explanation of what's going on here. If I understand what you've said and what economists are saying across the board is that when you raise interest rate, there's going to be less money to invest. And that is, it's going to dampen business investment. Is that a fair statement?
I think the idea is to
Makes it more
moderate
expensive
demand
to invest.
so that it can be in better balance with
Okay.
supply. In
So
the current
it's gonna make it
situation,
more-
demand is well in excess of supply in some areas of our
More expensive to invest, which in turn is going to throw workers out of work. And when they're out of work, they have less money to spend. So I get that rate increases stop companies from spending money to build new plants or to buy new trucks or to hire new people. Right, Chair Powell? When money's more expensive, they're less inclined to do that. I think that's what you just said on asset pricing, right?
Well, in the labor market, you have, as you know, you have a situation where there's a shortage of workers, and there are two job vacancies for every person who's actively looking for work.
We can't even see the captions, so I'm just going to turn the captions off here. But let's continue.
Work. So part of this is to get the labor market back into balance.
Well, I appreciate you call it back into balance. What I'm trying to get at, though, is what does the tool of raising rates do? And part of what you just said is that it increases, in effect, the cost to invest, to buy those trucks or new plants or to hire new people. The reason I raise this and the reason I'm so concerned about this is rate increases make it more likely that companies will fire people and slash hours to shrink wage costs. Rate increases also make it more expensive for families to do things.
Yeah, that's really what these excuses are for. They use these excuses so they do not have to pay employees as much. They want to fire employees, cut their wages, as Senator Warren just said, but fire employees, cut their wages, etc. It's really just screw over the middleman because we got to pay out a little more money. It's really all it is. Uh, greedy corporations is what it is, and this is what a free market does. You have to have regulation on corporations and businesses, and you have to break up multinational corporations if you expect there to be competition, lower prices. But let's continue.
Things like borrow money for a house, and so far the cost this year of a mortgage has already doubled. Inflation is like an illness, and the medicine needs to be tailored to the specific problem. Otherwise, you could make things a lot worse. And right now, the Fed has no control over the main drivers of rising prices, but the Fed can slow demand by getting a lot of people fired and making families poorer. And while President Biden is
I was not aware that the federal government had that kind of power to actually fire workers. That's a good thing. That's good to know. If they can do that, then why can't they put regulations in place that will protect the consumer from price gouging of corporations and protect the workers from getting a decent wage they can make a living on, afford food, housing, what have you, and workers' benefits, that they can have benefits like such as paid family and medical leave, things like that. Healthcare, I don't think healthcare should be tied to your job. I think everybody has the right to healthcare. Healthcare is a human right, and that's why I support Medicare for all. But like I said, if the federal government has the power to fire individuals who work for these large multinational corporations just because the corporations want to save just a tad bit of money when they're making record profits. They've made record profits during the COVID-19 pandemic since the lock. At first, they were suffering just a little bit, but they've really flourished with how much profit they have made. Therefore, they can pay better wages. They can give better benefits. They don't have to price gouge consumers. So let's continue.
Is working to increase energy supplies and straighten out supply chain kinks and break up monopolies.
I do want to say one thing about gasoline. President Joe Biden is asking the president of Saudi Arabia, I forget their name, whatever their name is, but human rights violations. We cut our oil supply with Russia. We're not getting oil from Russia anymore because of human rights abuses, but we're going to go to Saudi Arabia where there's also human rights abuses. One, that's hypocritical. Joe Biden's full of crap. Two, that's offshore oil drilling. We've got oil reserves in our country. At this point, our government is intentionally trying to price gouge consumers. They want corporations to price gouge consumers. Because why wouldn't we be tapping into our own oil reserves? Why are we relying on other countries for our energy? Let's continue.
Monopolies and bring down prices, you could actually tip this economy into recession. So I just want to say, you know what's worse than high inflation and low unemployment? It's high inflation and a recession with millions of people out of work. And
yes, if they trigger a recession, what a recession would do is it would only negatively affect those at the bottom end of the wealth spectrum. Or I do not. That was not the way to word that. But it at the bottom end, it would affect the poor and the middle class most. The 92%, the 1% on top will not be affected at all. Mainly because a lot of their money that they hold is in stocks. So let's continue.
And I hope you'll reconsider that as you drive this, before you drive this.
They're not going to reconsider this because the people that we have in are neoliberals. They believe in free market capitalism where the government has no intervention. In reality, what they're really doing is just accepting bribes from large multinational corporations from the fossil fuel industry. They're accepting bribes from, and that bribes they get, they don't. Basically a bribe, so they won't regulate those corporations because if they regulate those corporations, the corporations may lose profit. So,
Economy off a cliff. Thank you, Mr. Chairman.
Thank you, Senator Warren.
all right, so great speech from Senator Elizabeth Warren. And that will conclude this video. Thank you guys so much for watching. Hope you all enjoyed. Make sure you hit that like button, subscribe to the channel, comment down below, all of that. And I'll see you guys in the next one. Try not to kill each other, and peace.